Hey there, this is Casey Lau, Strategic Mortgage Solutions. I'm here for the Tuesday Mortgage Talk. Hey, I meant to make this video here yesterday, but I got a little sidetracked. My daughter tripped, fell, and just couldn't make it through school yesterday, so I kind of took her and it cut me off track from doing this. I'm kind of getting back in the same normal swing of things, and I wanted to share a few things I think that would be of value for you. First off, last week, HUD announced that they were increasing the FHA loan limits for homes throughout the United States, specific to the median sales price in certain counties. Here in Lane County, the median sales price was such that they raised the FHA loan limits to $314,827. It's important to note, though, that throughout the state of Oregon, a majority of the counties are at that limit, but there are counties where median sales prices were much higher, such as Deschutes, Portland metro area, where the median sales price was significantly higher, and so therefore you're going to see higher loan limits in those areas. I've actually included a link within the email I sent out and distributed to the different realtor partners that this video automatically goes to. But if you get this video via Facebook or some other social media, you can always shoot a text or email to me, and I'd be happy to forward the link. The nice thing about the link is it's essentially something that's offered by HUD, and year after year when HUD makes these different changes, if you keep that link, you can always go and check those median sales prices. And it's handy, especially if you're looking at maybe perhaps buying a duplex, a triplex, or a fourplex. Not only in Lane County are those loan limits going to be set at a higher amount than the $314,827, but in those other counties that start out at higher loan limits, those loan limit thresholds for multifamily units, 2, 3 unit, 4 units, are also progressively going to be higher. So it's a great place to go and reference and know that you're confident about the loan limits there that you're going to be telling your clients about, or that you as a home buyer are going to be looking at and considering to help you with buying the next house. Next thing I want to share with you is revisit the Homes for Oregon Heroes program that we rolled out here about a month ago. As many of you that may pay attention to these videos may know, we wanted to be able to create an opportunity to add additional value and benefits to those that we feel like serve our community in a way that loan officers like me just don't. Your firefighters, policemen, first responders, teachers, current and former militaries, nurses, doctors, other medical professionals. A lot of these people do great things for our community, so we created a program to be able to honor them and offer them some unique special benefits that we don't honor to just every client out there. So please take a look at it. If you've heard of some other hero designation programs out there, this could be a great one for you. It's a little different than some of the other ones, of course, and it's here locally. And the great thing about this program is that we give back to our community in honor of these veterans as well. A certain percentage of proceeds from the net revenue we make from a hero loan goes back into our community in certain ways that we outline. Finally, I want to talk about a unique loan opportunity that came my way just the other day that was referred to me. This was a case where it was an investor who is looking to pay off a private money hard loan, as we call it. If you're not familiar with those types of loans, they're usually privately sourced loans where either an individual or an investor is offered financing to somebody that might not otherwise been able to get it at the time that they received that financing from other institutions such as Fannie Mae, Freddie Mac, who we call conventional lenders, or the government-insured lenders, FHA, USDA, or VA. They typically come with higher rates and fees, and sometimes they have balloon payments to them. Sometimes they have, variability terms to it. Things that can make those loans essentially more expensive to hold on to long-term, but they're a good short-term fix. In this case, this investor is looking at the idea of refinancing with me, utilizing what we call a non-prime portfolio loan. A loan where you wouldn't necessarily have to document any of his income to qualify. just that the property itself has a particular amount of cash flow to not only just cover the new mortgage that we provide, but be able to also have a little surplus in cash flow. In addition to that, an appraisal, we can demonstrate at least a 25% equity position and at least a 600 credit score, but obviously the better the credit score, the better the rate. And so something you might think about is pretty shocking, with these kind of flexible terms, what kind of rates somebody can get. Amazingly enough, with this person, I'll be quoting something that is very near to what a standard conventional loan might offer today for that same investor, where you'd have to document all his income and resources to the extent that the conventional loan requires that he doesn't really qualify for. So something to keep in mind, if you yourself or somebody or a client has some unique circumstances or some challenges about their finances, their credit, their ability to document income, these portfolio non-prime loans can create some opportunities that are very surprising and can be very advantageous in comparison to other traditional forms of financing people would find at banks and the direct retail lending institutions. So that's it in a nutshell. If I can ever be any help, have any questions, shoot me a text, email, or a call. This is Casey at Strategic Mortgage Solutions. Have a great day.